Assalamu alaikum. My name is Dr. Abdul Adamu. I want to, in this video, I want to show us how we can use Excel to compute financial statement and cash flows. So in the video, we are going to demonstrate some of those items we learn in our classes. So we are going to look at how we can compute the balance sheet, how we can do the income statement, and how we can do the cash flow. So the first thing here is the assumption of the class. The assumption of this class, we have 2 years, 2015 and 2016. The company name is AB Corporation. Then the number of shares outstanding as at December 31st, 2016 is 50 million. Now for balance sheet, items are arranged in order of liquidity like we mentioned in the class. We have current assets, we have net fixed assets, we have current liability, we have long-term debt. So to calculate our shareholders equity, if we can remember our accounting equation, which says asset equals to liability plus equity. So therefore equity will be equals to asset minus liability. That is our normal accounting equation. So we can use that to find our shareholders equity. Secondly, net working capital. We can get the net working capital by subtracting current liability from current asset. You can see our current liability is 2,800. Our current asset is 3,000. So if we want to compute our current liability, we said equals to our current asset is 3,000. We do cell referencing minus current liability, which is 2008. We click it, we press enter. So our net working capital is 200. So we want to use this information here to do the balance sheet. Like we say, balance sheet is a snapshot of the position of the firm at a particular point in time. So current asset is equals to, we have current asset here, 3,000. Net fixed asset is equals to 15,000. Current liability, this is equals to 2008. Then long-term debt equals to 8,000. Then our owner's equity, if we use the accounting equation, equity is asset minus liability. Our total asset is 18,000. Therefore, equity is equals to total asset minus bracket open sum minus sum of this and this, enter. Yes, so our owner's equity is 7,200. You can see now that our balance sheet balance. So if you want to test, whether it balance, we can use a logical test equals to is equals to is total asset equals to total liability. You can see it's true. That means our balance sheet balance. Now the next thing we look at is we have an example and an assumption. We had an example and an assumption. Now we want to construct our balance sheet from this assumption. Now on the asset side, we normally start in order of liquidity with current asset. So in 2015, the current asset is 2,140. So we do cell referencing equals to this value. The net fixed asset equals to 2015 value. 2016 value we can drag this way because they are close. Can drag this way because they are close. So we can now add the sum of this and this give us the total asset. This is equals to sum. We use sum function, this and this. Enter 8,910. You can copy this way. So that is our total asset. You go to total liability side. We have current liability for 2015. Current liability for 2015 is this. So equals to, for cell referencing, long-term debt for 2016. Current liability you can drag, but current liability is equals to 2016 is this. Can drag this here since they are close together. You can see it brought 2,095. So the total liability, if you press Alt equals to, so it want to add all, so you drag the two you want to sum. That is the shortcut. So you can drag this one this way also. That is the total liability. To get our owner's equity, is the total asset, which is minus the total liability. This is equals to this minus total liability, which is this value. Can drag it here also. That is the same. So can double click and see, you can see. So total liability plus owner's equity, that is the sum of this and this. So use sum function equals to sum this and this, enter. So you drag, so you can see the balance sheet balances. So this is how we use Excel to do our balance sheet. Now, working capital, like I said earlier, is the difference between current asset and current liability. So total asset is on the left, asset is on the left side, and liability is on the right side. So current asset, fixed assets classifying to tangible and intangible fixed assets. Then current liability, long-term debt, and shareholder equity. This is the right side of the balance sheet. So The difference between the current asset and current liability is the net working capital. So you can do a sheet reference. If you want to compute the net working capital for 2015, this will be equal to, we go to our assumption, we go to our balance sheet, we see the assumption. So current asset in 2015 is this, minus current liability in 2015 is this. Press enter. That is our net working capital. For 2016 equal to, we go back, current asset in 2016 minus current liability in 2016. We press enter, you have equal to. We have equal to. That is our net working capital. Now for income statement, this is our income statement. This is our income statement. If we want to compute income statement where the equation is revenue minus expenses to get net income. So from this assumption, our revenue is sales. The other one are expenses, and they are here. So we are bringing them here. For sales, this is equals to 2016 value. This is sales value. Bring it there. Cost of goods sold equals to, this is the value. Depreciation equals to, this is the value for 2016. Then earning before interest and tax is sales less cost of goods sold and depreciation. So we say equals to sales value minus sum of these two. We close the bracket, equal. So this is our earning before interest and tax. Interest paid is 267. Taxable income, that is the difference between earning before interest and tax and interest paid. So equal to this minus this. That is our taxable income. The tax rate is 30%. So this is the rate. So we say equal to this rate times the taxable income. We press enter. Now, if you look at this answer, it may be in a decimal point. So we don't want to see the decimal point, you can round. So by using the round function, you come to the formula bar, you use round function. Round function will round to 0 decimal places. Round. So we have round function. So this is our number, comma, we round it to 0 decimal places. That is the number of digits. The number of digits here is 0. You close, you press enter. So in that case, this number is round to a whole number. Then the net income is equals to the taxable income minus the tax. So this is the net income. So we have our dividend. Our dividend is given, which is 225. Retained earning is the net income minus dividend. That is equals to the net income minus our dividend. This is our dividend. So this is our retained earning. So this is the number of shares outstanding. We in financial statements, they normally report earning per share. So the earning per share is the net income divided by the shares outstanding, which is 50 million. So the net income is this. If we divide it by the number of shares, which is 50, you can see it's 7 naira 96 kobo. Then the the dividend per share is the number dividend amount divided by the number of shares outstanding, which is also 50. So this is dividend per share. So this is how we construct our income statement for AB Corporation. So the next thing we are going to look at now, is cash flow. Now for cash flow, we are going to calculate cash flow from assets. Cash flow from asset is equals to cash flow from creditor plus cash flow to shareholders. So we are going to use our financial statement, which is this income statement, and the balance sheet which we have computed. We are going to use it plus our assumption value to be able to compute our cash flow identities. So for cash flow identities, this is the formula for cash flow identities. So here we have cash flow from assets, like I said earlier, is cash flow to creditors plus cash flow to stockholders. So cash flow from assets is the same as operating cash flow minus net capital spending and change in net working capital. So operating cash flow is calculated by this, with this formula, earning EBIT plus depreciation minus taxes. Net capital spending is calculated by ending net fixed asset minus beginning net fixed asset plus depreciation. Change in net working capital is calculated with this formula, and cash flow to creditor is calculated like this, and this is also calculated like this. So we are going to use this our assumption to do the computation here. So let's see, cash flow from asset. So we have cash flow to creditor plus cash flow to this. Operating cash flow, earning before interest and tax. So this is equals to, that is equals to EBIT is 835. Our depreciation, this is equals to depreciation. This is our depreciation here. Our taxes equals to, our tax is 170. So if we bring this together here, this is equals to this plus this minus this. So our operating cash flow is this, 1,683. Now the next thing, we will calculate our net capital spending. Ending net fixed asset, that is our net fixed asset in 2016. So our net fixed asset in 2016 is this value minus beginning is the one for 2015. Beginning is the one for 2015, which is this. Our depreciation value is this. So let's do our computation. This is this minus this plus this. So that is our answer. Change in net working capital, this is equals to end current asset minus end current liability. So we go back, the end current asset is this minus end current liability, which is this. You press enter, that is the value. This is equals to beginning network, beginning minus current asset minus end current asset. Beginning current asset is this minus end beginning current liability. That is the value. So this is equals to, we have this minus this. That is the answer. Then cash flow to creditor, interest paid. This is equals to, our interest paid is this. Net borrowing, that is end long-term debt minus beginning long-term debt. So end long-term debt, this is end minus beginning, enter, we go back to our page. So this is equals to this minus this. So that is the answer. That is the answer. Then finally, we have cash flow to stockholder. This is equals to dividend paid. Dividend paid is this. We have net equity raised. That is end common stock. That is equals to end common stock. So we go back, our end common stock, that is owner equity, minus beginning common stock, minus, because this end common stock contains retained earning, minus our retained earning. So that is the value. Here now, this is equals to this minus this. That is the answer, 94 naira. Naira. Let me format this. So the value we have gotten, the value for operating cash flow is equals to this value. The value for net capital spending we have calculated is equals to this value. And the value for change in net working capital, we have computed it, is equals to this. So therefore, our cash flow from assets is equals to this minus this minus this is 274 naira. So let's cross check. That answer must be equals to this. So we have cash flow to creditor. Cash flow to creditor is 180. Cash flow to creditor equals to cash flow to creditor 180. Cash flow to stockholder, we have computed it, 94. So if we sum that, we should be able to get 274. This plus this. So 274. So we can see clearly that this is how we compute cash flow. And in finance, we don't normally use accounting information. We deal with cash flow, the amount of money that comes in and the amount of money that is spent, the actual inflow and outflow of money. So this is the video on how we can do this video demonstrate to us on how we can do balance sheet and income statement as well as cash flow identities. Thank you. If you love this video, kindly subscribe to our YouTube channel. So thank you very much.